going to quickly go through this market update. Once again, throw in questions and answers as we go, and we'll talk about it here at the end. But let's jump right into it. So before I get any further along, I think it's important to talk about the market, and there are changes, and there are some concerning things that are happening that may be a little bit of the head scratcher for a lot of you that are watching and trying to understand the market. And let's get to those right away. One of them, and has been the biggest issue for housing for the last 2 years, has been the supply of homes. We're sitting right now, we're down 47% year over year, and we're at this number that's hard to understand, but it's 1.8 months of supply. And all that really means is that if no new homes come on the market, we're completely out of homes in 1.8 months. We just don't have enough inventory on the market. This has been falling since mid-2020, and is about a third to a fourth of what we really feel is a balanced market, balanced market. The other one that we really address, and we actually did a webinar on housing affordability and its relation to the increasing homelessness population that we have here in Central Oregon. We just did that a couple of weeks ago. I believe we've got that in our resources. But we have an affordability and availability crisis. Here on the screen, I pulled up a little thing. This was from this morning. In an 8-mile radius around Bend, we have 216 homes currently on the market. That's far shy of what we're normally used to seeing, anywhere between 800 and 1,000. But there are homes. Where it really comes into play is under 500,000, we've got 7. And this is a point that is really a gut check, because the average median income of Bend can afford somewhere around a $400,000 home. And when under 500 and under, we only have 7. This really underscores the crisis that we have as far as affordability and availability here in Bend. However, the market is calming, the market is normalizing, and we're starting to see some light at the end of the tunnel of this kind of panic buying that we've seen for the last 2 years, and the trends that are going to give us a healthier market both now and into the future. And these are the things that I want to concentrate on. Showings are going down a bit. This is a showing time index, and what this really shows is the amount of showings that are happening. And this is a nationwide index, but we're seeing almost identical trends here in Central Oregon. That really showed that February, March, April, May of this year were absolutely unprecedented in the amount of showings that we were getting, but that's going down quite a bit. Now, to put it in perspective though, this chart I'm pulling up here on the right now shows that while we're down a little bit from, that's a September data, that we're down a little bit from last year, we're still about 50% higher than where we were in 2017, 2018, 2019. So what this is showing is that the fever, the amount of showings, the amount of purchases are slowing down a bit, but we're still well above history. Sales prices, they are up for sure. They're up 25% or so year over year. But what's been encouraging to see is that leveling off. We saw the peak back in about May and June of this year. And actually we had a peak of our average sales price, or excuse me, I'm using median sales price, was up over $660,000 for a month or two. And we're back down to about $637,000. While it's still uncomfortably high, what is showing is a normalizing and a soft leveling off of that trajectory, kind of that hockey stick pricing trajectory that we saw over the last year and a half. Do any of the agents here, are you feeling this on the front lines as well? And are the buyers able to notice this?
Yeah, definitely. I'll kind of chime in here. So one thing that I think has been really important for buyers is they're starting to feel a little bit more confident that they actually have a shot getting a house when it comes on the market.
Yep.
I think part of the reason why we're seeing, our showings up, year over year of what we would normally see is that buyers feel like they actually have the ability to look at more homes and make a choice for a house that's actually right for them versus just having to snag the first thing that comes on the market.
Yeah, and I appreciate that. Are sellers getting wind of this yet? How are the sellers feeling right now with that? Alice, or Eric, do you want to jump in on that? You know, are they noticing that leveling, that slight pullback from pricing the last 2-3 months?
I'll let you go on that one since you were chasing that one down.
Yeah, totally. So sellers are definitely feeling it. I think that, the seller 6 to 10 months ago totally had a different mindset coming into the market. And I think now buyers are just really savvy in the market and the showings are not as hectic as they were. But I do feel like the buyers that are in the market right now are really qualified and ready to go buyers. They're not the wishy-washy, summer visitors who think they might give Bend a shot. I feel like although there's a lot lower amount of showings for the sellers, they're really good quality buyers.
Yeah, thank you. And what this also shows, right, is that normalization where we usually have a pullback. And we really didn't see that pullback in pricing at the end of last year. But historically, we've always kind of had a run up in pricing where every year the peak pricing was kind of that May, June, July. And we had that trough pricing every year, October, November, December. And there was usually about an 8% delta between that. While the long-term trend always went up, or historically went up, there was that kind of annual cycle that we didn't see last year, but we're starting to see here in this fall. So what this is telling me is that we're getting back to more normal dynamics in the market. And frankly, it was refreshing to me. Another refreshing piece of data, and you could definitely, I would love someone to chime in and talk about this, is the percentage of original list price received. What this means is if a home was put on the market, how much did they get for it? And we had a couple months this year where we got up to almost 104%. So that means on average, the homes were selling 4% above average listing price, when historically we were about 97 to 98%, which meant that homes, if they were properly priced, usually sold for about 2 or 3% lower than asking price. And we've come back down under 100%. We've come back under 99%. We're at a 98%, and that's continuing to fall. So what that's showing is that we're getting back to more normal negotiating power between buyers and sellers. Are you guys seeing that in the front line as well?
I'd say so. I'll jump in there. Yeah, I mean, we're definitely feeling some slowing with this, but buyers still do need to be prepared. It is a very aggressive seller's market. So buyers are going to be competing. Prices, have, been pretty challenging, and they do need to go in prepared.
Yeah, I can't mislead people thinking that the buyers are in control at this point, because what we're seeing is really the good listings and then the listings that aren't selling, right? The ones that are really well priced and are appropriate are still selling right away. And then the other ones are languishing or seeing bigger price reductions. Is that kind of the dichotomy that we're seeing on the market?
Absolutely. Sellers have to be priced right. And then, that we just have so many buyers still in the marketplace. So there's not enough homes for them right now. Yeah.
So what this shows here is, while that 98% looks like it's falling, it's still about the peak of where we've been. So while we're definitely coming off of those highs, we're getting back to a more normal market, but it's still a little bit seller driven. And this is a 10-year chart showing the history of percentage of original price received. So hopefully that helps put it into context a little bit more. Let's also talk about headlines, because in my opinion, and it's kind of the state of the world these days, is the headlines do more to terrify than to clarify. And we're going to help you try to get past some of those terrifying headlines, because frankly, it doesn't serve you in the purchase and sale decisions here in real estate in Bend, Oregon. One of these, Realtor.com, just put out a headline: foreclosures are shooting up. Is it a repeat of the early 2000s housing crisis? It's a great headline. It gets you to read it, right? But by the time you actually read the article, it's saying, hey, it's really not, because we had so little foreclosures before. But that's not the sentiment that's being put out there in the market. So I put up this slide here on the right. And what this is going to show is that, sure, foreclosures are up 49% year over year. Last year we had none, or almost none, because of there was a forbearance with the CARES Act because of the pandemic. Mortgage lenders weren't allowed to foreclose. And if we even date that back to the previous year, there was 28,000 foreclosures for the same quarter. And so, we're at what, 1/3 of the foreclosures that we were in 2019, but yet everyone's saying foreclosures are shooting up. No one thought of 2019 as a big foreclosure year, but that's the headline that we're seeing in the market. And this is another thing that shows, where foreclosures have been for the last 15 or 16 years or so. And this shows us that we're down in the very basement and we're at a small fraction. So this is one of the strongest markets we've ever been in. There's so much equity in people's houses. There's no reason for them to be foreclosed. If they're behind, they have plenty of opportunity to sell. So what I don't see is a big foreclosure wave, coming to soften the market. I think that's without question, but that's a headline that's out there because it's up year over year. But last year was a year of the likes of which we've never seen before. Another piece of data, and one more slide. This is showing percentage of distressed property sales. Back in 2012, 35% of properties were distressed sales. Here we're at 1%. So it's kind of a completely misleading headline, but you'll start seeing more of that, especially in the coming months, because we're going to have they're at the end of the forbearance. People that were behind in payments, they can actually start foreclosure procedures on, so we're going to see more of those headlines for the next 2-3 months, but dig into the data and kind of ignore the emotion of those headlines. Another one that we're seeing here is, here even CNN Business put, no one seems to be worried about a housing bubble, just like the last time the bubble burst. But when we actually get into the data and actually say, okay, let's get past that, just because we've had a run up in prices, where are we going from here? This was a poll that was put together from Fannie Mae, Freddie Mac. These are real people, National Association of Realtors, et cetera. And the average prediction for forecast for 2022 is 5% appreciation. There's really nobody out there that's calling for a price pullback across all markets. But yet, the headlines are out there.
Can I chime in on that one real quick, Brian?
Please do, yeah.
I think that's a really important slide for buyers to pay attention to, because a question that I get all the time is, I'm starting to see price reductions. I think the market's going to go down, but when you really break down the data, that's not what's being forecasted, and that's not what the data is saying. So I think that's a really big one for people to pay attention to.
No, thank you for bringing that up, because this is probably one of the bigger things that we're hearing from our buyers, right? Prices are going down. I'm going to wait for the crash. And there's a big part of me that would love a crash. These prices are uncomfortably high. There's no, this is not a balanced market. It's hard to work and live in this market. But we're so fundamentally different than we were back in the early 2000s, with the amount of speculations that we had back then, the amount of, liars loans and the amount of, debt that people could take on quite easily, to the amount of homes that were being built. We're still only building 30% of the homes that we were building then, et cetera. We simply don't have the supply, and we have such a shortage of houses that I just don't see that housing price come reeling back. I do think that we're going to come off of those peaks a little bit that we had in that one quarter earlier this year. But when we look kind of year over year, we're certainly not seeing it. There could be small price sectors, but I certainly don't see a wholesale price correction across the market. And that's leading to this sentiment. So here's a poll that they just put out there. Beginning of this year, 70% of the people thought it was a good time to buy a house. Now we're down to about a third. And so this is the sentiment that's out in the market. And this is what we need to talk about. And is this sentiment right or wrong? And, because if we're making decisions off of headlines, you can certainly miss the market. It was the same during the beginning of this pandemic. If you remember back, we did those webinars back then, February of 2020. Nobody thought it was a good time to buy a house. And we went out there and said, hey, we're going to be a little bit of contrarians here, but we're looking at the fundamental of what's happening. And we think housing is going to be more important than ever. And it's going to have one heck of a run. All the builders shut down production. There's no new homes coming out of the ground. It's going to have a tear the next year and a half. And for those that were following the headlines, they missed out on this huge run up. And when interest rates were low, prices were lower. And I think we're at another one of those critical junctions right now where the emotion of the headlines could distract us from good fundamental decisions. And part of that is that homes really mean more than ever. And while this is kind of the touchy-feely part of the business, homes are homes. Homes are not strictly investments. And they put a poll out there and they said homeowners who feel emotionally attached to their home, pre-pandemic, it was 58%. Now we're at 70% and rising. So the importance of the home is higher than ever. It's really been their safe place during this pandemic. It's been their home office. It's now been their gym. It's now been their school. And it's one of the reasons as well that we're not seeing a lot of new homes come on the market. People are attached, they're entrenched, and they don't want to sell. And it's playing into this inventory crisis that we have.
And can I just make a quick comment on not this slide, but the one before in regards, the question was, or it was touching on whether this is a good time to buy. And I think another significant kind of consideration that I'm certainly having with some of my clients is that, you know, while we can forecast or anticipate roughly 5% increase, you know, between now and next year, you know, the anticipation is also that interest rates are going to creep up a little bit. So, you know, when you consider the increase in the values themselves, as well as, you know, say it's 1/2 to 3/4 of a point over the course of that loan, you know, you're talking real money at that point. It's, you know, it has an impact in the long term on, you know, if you wait a year, you're going to pay more for that home and potentially a higher interest rate. So it's, you know, to me, it's really becomes kind of a numbers game and helping people see the benefit of kind of entering the market now, even though we do have some supply challenges and so forth.
Yeah, and that's a good point, because a lot of people just look at purchase price alone, but what they forget to factor in is that 2/3 of purchase price is your interest, because most people get a loan, and if 2/3 of the cost is interest, the difference between a 3% loan and a 4% loan can have a much bigger impact than even a 10 or 20% correction in housing prices. So if interest rates go up 1% in the next year, but housing prices go down 20%, you know, we've run those tables before, it can actually be cheaper to buy it now at the higher price, as long as your holding period's more than a couple of years. And that's the thing that, you know, we need to take advantage of, because, I mean, frankly, let's all admit it. The reaction to this pandemic and the economic crash and the Fed understands this. They understand that housing is about 17% of our annual GDP. They knew that the quickest way to bail this out and to get the economy going again was to encourage home purchases. And that's really what happened earlier last year. And so they bought down. Not only are they, you know, lowering their Fed funds rates, which lowers the mortgage rate, they're also overbuying the mortgage-backed securities. And I know I'm getting the weeds a little bit on this, but they're artificially bringing these interest rates down. They should not be in the low 3%. Market rate, even without them, even with the current Fed funds rate, should be closer to 4%. And as soon as they stop buying all these mortgage-backed securities, it's going to float up to market or above. And that's really, so there's, you know, hey, everyone likes a government handout, right? These interest rates are a government subsidy. I don't even know any other way to put it. And when you get to latch on to a government subsidy for the next 30 years or even 10 years, I think there's a huge opportunity there. So let me get back to this, because I know we're going on about 20 minutes right now. And Eric, thank you for doing that. I'm going to have to share my screen again. I want to get back to this slide. And what this really shows is, and what we were talking about is that homes meaning more than ever. This really plays into why we have so few homes. This is my inventory slide from earlier. Another thing that we've talked about before, but I just want to bring it up again. We've had 13 years in a row of underproduction of housing. This goes all the way back to the Great Recession and Great Correction that we saw in the mid-2000s. Banks shut off construction loans to builders. Builders went running for the hills. Land developers couldn't get leverage to do land development. And we really have been undersupplying homes for 13 years in a row. And we have such a massive shortage. You know, if you look at the run-up years and you wonder why we had an ample supply that kind of caused that crash in 2007, look at those years in red, how many homes we were producing compared to how many homes we're producing now. So the fundamentals are wildly different. And we've talked about this before too, but let's talk about US population. Let's talk about the millennials. The millennials are entering the room, guys. There's 82 million millennials, and their average age right now is 28. Home buying peak is 32 to 34, right? So in the next, let's call it 4 to 5 years, we've got 5 million millennials a year coming into the home buying market. And this is the likes of which we've never seen before. So not only do we should come in with a huge surplus of housing going into this wave that we're about to go through, and we're going in with a shortage. So if I were to look and say, okay, what are the long-term fundamentals of real estate the next 5-10 years? We're vastly undersupplied. Does anyone disagree with that one?
Ryan,
No.
perfect. Thank you for saying that. Yes, we have low building permits being pulled, we have low inventory, and we have more and more buyers coming to the marketplace. So everyone just needs to keep that in mind as we go into the spring.
Yeah, I mean, it's so easy to talk about migration from the pandemic, right? People coming from big cities to secondary markets like ours, but layering on top of that, the millennials that are out there in the market, they're also coming in their home buying years. They're all growing up, they're having families, and it's time for them to start buying houses, and it's happening. So we've got an interesting couple of years ahead of us with the shortage of housing that we're having. And they're starting to meet it in some factors with apartment buildings, things like that. But for single family homes, we have such a shortage in housing. And Eric, go ahead.
Can I add to that real quick too? I was reading an article that actually talked about the millennial buyer pool. And one really important fact, which plays into all of this, is that a lot of the millennials that are anticipating to purchase a home within the next 4 years, I want to say it was about 80% of them are not freeing up single family housing. So they're either coming from apartments, living with parents, or multiple roommates per single family home. So to me, that is the big trigger. It's like, wow, all these people want to buy, but they're not like moving out of a house to buy another house, you know?
The parents are going to finally get their quilting room back.
Yeah, exactly.
Okay. And Eric, thank you. And Eric, this is what you were talking about before. This is the prediction, Freddie Mac, of where they're predicting interest rates will go over the next year. And right now we're right around 3.25. And, at 3.6, that's over a 10% raise in interest rates. And I think those are some conservative estimates on where interest rates are going. And while we have been saying interest rates were going down for the last number of years, and we've been a little bit liars with that, there's really good reason in the sense that we've never had this continued low interest rate environment with all these government purchases of mortgage-backed securities. We've never seen, quantitative easing, et cetera, et cetera. We've never seen the likes of that before. But the fundamentals are really there, and inflation is now real. I think finally everyone is admitting that inflation is real and it's coming, and the Fed wants to get ahead of this, and interest rates are going up. And so this is kind of the big last opportunity to kind of buy in on a long-term, purchase. Now, if interest rates go to 4 or 5%, that's still a good rate historically. I mean, it's near all-time lows, but we're just kind of at that last window where things are softening a little bit. There's a little more homes to look at, and interest rates are still low. I think we're kind of in one of those windows of opportunity, despite the fact that you kind of have to hold your nose when you go to look at those purchase prices, right? So with that aside, we've got some really good Q&A questions that have come into us. And what I'd like to do is step back a little bit and let the expert panel here talk about it. And Jamie, do you have the list of those questions put together?
I do. So we had a lot of great questions come in from buyers and sellers. So let's go ahead and start with some of the top seller questions we have. Eric, we're going to throw this one out to you. Should we be trusting Zestimates?
In the grand scheme, well, that's a good question, but in the grand scheme of it, I guess when you boil it down, Zillow uses a mass model theory to come up with its values, and in a nutshell, their goal is 10% plus or minus. So not really that solid when you're really dealing with markets that are not metropolitan areas. Zillow is best when you're dealing with large amounts of data. So, the local nuances of a real estate market, whatever those might be, whether there's, new highways going in or what have you, or changes in neighborhoods and just the overall dynamics of a local market, Zillow is not really where you want to look. And then the last part of that is that they use data in a way that is advantageous for the average, not for the unique properties, or they don't always take into consideration locations and views and so forth. They're really just piling it all together, using an average and putting it out there. So I tend to try and steer people away to ask the hard questions about their own property and really figure out, best fit and best, knowledge of somebody who's from the area.
Eric, I jump on the tail of that a little bit. I think you're right. The logarithms have some merit to them, but they're just a logarithm. And when you're in a unique market like Bend, all bets are off. And even on a national scale, they went, so I'm not sure if anyone's been following the headlines, but the last year, Zillow went all in on what they called their iBuyer program. And they were buying homes in the most homogeneous markets where they thought they couldn't mess up. And they were buying it on they were buying homes directly based on their Zestimate minus about 12% fees, et cetera, repairs, just a penalty for handing us the keys in a week. And they lost money on it in leaps and bounds, and they just called an end to the entire program. So they are complete. They went all in on that and they went all out. And if anyone's watched Zillow's stock over the last couple of weeks, it has crashed. It's about half of what it was last year. And that really speaks to, they were just, that Zestimate didn't work for even them. So good point.
And before we move on, if any of our viewers have questions that you want to submit, go ahead and put those in the Q&A now and we'll field them at the end. All right, our next question, Stephanie, this one's for you. What can I do to help my home look great, add curb appeal? Does staging really work?
Staging is so important if you're thinking of selling your home, and it can be something as small as just starting to pack up your home, before you list it. So it's great. Go ahead and pack up all of your off-season clothing items so that your closet looks bigger, or pack up like all of those cooking appliances and bowls and things that you don't even use anyway. I mean, box it all up, put it in the garage, get it out of your hair. It just opens up your whole home to just look bigger, have more space, more cabinet space. It's all appealing to a buyer. I mean, also like pack up your personal items, make it a blank slate so that buyers can imagine their life in the home. Do what you can, depending on the season for curb appeal. Add mums if it's the fall, add pumpkins, if you're selling in the winter, do the Christmas holiday decor, whatever it may be. I think it's really important to add as much curb appeal and pizzazz to the home as you can.
Hey, Stephanie, I have a question. I want to follow up on that. So we were with the seller the other day, and I know what we told them, but I'd like to have you repeat it or give your opinion. They said, hey, we want to go for sale in the spring. Should we remodel our kitchen? Should we remodel our bathroom? Should we do all the things that we've been wanting to do for the last 15 years before putting it on the market?
Great question. Hey, I mean, if you're living in an older home, you kind of need to update things every 10 years or so. I'm not sure what state their home was in, but I would say a new buyer is going to want to do it the way that they prefer, right? So maybe having a credit available, if somebody talks about it or has a concern about it, saying, hey, here's a credit for new flooring, or here's a credit for some bathroom tile or some kind of updates. I think that's a great option to give a buyer.
Yeah, I mean, to be honest, that's what we told them yesterday as well, because what they like to say is, hey, a new buyer is going to want to remodel kitchen, but hint, they're going to want to do it their own way. Yeah. And what we've seen is the return on investment is highest for the big things that are not client specific: siding, roofing, flooring. Those are the things that everyone can get on board with. They say, hey, they put $30,000 in the siding, the house is worth $29,000 more. Those have 80, 90% ROI. Kitchen remodels have 50% ROI, even day one. And after 10 years, they all have a value of 0. Homes are remodeled every 10 to 15 years. So our encouragement is sellers saying, hey, I'm not ready to go on the market. It needs an update. You know what? So does every home over 10 years. Just touch up the paint, get it clean, get it staged. That's for the new homeowner.
Yep.
Okay, that's a great segue into our last seller question. So we're getting towards the end of fall, coming into winter. Have sellers missed their window? Should they be waiting for spring, summer, when people are looking to move? What do you guys have to say about that?
I'll chime in on that one. So I live in the buyer world most of the time. And, if I could throw one thing out there, it would be absolutely don't wait. If you're in a position where you need to sell your home because functionally it doesn't work for you, or, whatever the reason may be, if it's not the right fit anymore, that should be your motivation for selling. There are plenty of buyers out there right now looking for homes. I'm taking them out literally every day trying to find stuff that works for them. So, ultimately my answer to that is move when the time is right for you. And there are absolutely buyers right now to purchase your home if the time's right.
Great, thank you. All right, let's move into our buyer questions. So Alice, can you address, people are seeing homes on the market longer with some price reductions. What is this meaning right now?
Yeah, so this is a little bit of a segue from the previous thing that I spoke on when Brian was given his presentation. So, one thing I really want to point out in this market is there is a difference between list price and market price. And I think a lot of people get stuck on, here's the list price. How far up from list price should I go? Or are properties coming down from list price? It's important for people to understand that listing price is subjective. It's a number that the seller and the broker have come to agreement on. That being said, if you look at market value versus list price, what I'm really seeing is homes that are priced at market value or below market value are still extremely competitive. We're still seeing multiple offers. We're still seeing buyers needing to come in with terms that really, jazz up their offer. But it's really the overpriced houses that are starting to see the price reductions, and they're kind of getting that. And I know we've talked about this before, but I use it all the time, that brown banana effect, where they, overpriced, they sit on the market for a little bit, and then everyone wonders what's wrong with the house. And then they end up reducing more than where I think they would have been if they priced right to begin with. But I do think it's important for buyers. I've got a lot of people who think that because they're seeing price reductions, it means prices are coming down. The days of, overpriced listings, getting a ton of offers and getting these outrageous numbers are definitely gone. And I think there's a nice window for buyers in the next couple of months while we're in the winter and before we see the spring rush of buyers. But it doesn't mean prices are coming down. It just means that the overpriced listings are just starting to finally not sell and they're having to get a little bit more realistic with pricing.
Mm-hmm. So are buyers still needing to do things to make their offers really stand out? And if so, what are those things?
Absolutely. Should I jump in here?
Go for it.
Please do.
Yes, make a strong offer. You only get one chance. Nobody is coming back right now and saying, hey, give me your highest and best now. You only get one opportunity. So there are many ways to make your offers more stellar. Come in at your top price is your first price is your high price. Really be serious with it. Come in pre-approved, be ready to go with your pre-approval letter. Escalation clauses are awesome tools. It's a simple addendum, and it just helps you from taking a shot in the dark where you don't know where the other competitive offers are at. So many things. Earnest money, you can add more earnest money. You can make it go hard at some point during the offer process. Inspections, if the seller is out of town, just say as is inspection contingencies. There's so many different strategies to use during the offer process. And it's really best to work with your professional broker the strategy is going to be different for every single property.
So we actually had a question come in about earnest money. What does that mean to go hard, non-refundable?
I'll take that one. Essentially, as Stephanie just mentioned, over the course of the contract period, you have a series of inspections, whether that's preliminary title, your home inspection, HOA review. There are a lot of other kind of opportunities to look at what the scenario is with that house. Maybe it's lot lines or appraisals and so forth. So what you're essentially doing is in showing that those sellers how truly serious you are and really want that property, you make the agreement to allow that money to be non-refundable after a series of events within the contract. That essentially it's still, it can, like Stephanie said, you can organize that contract in a lot of different ways, but that money is no longer yours. You have been through all of the inspections or whatever the criteria is with that contract. And it is essentially going to be in the hands of the sellers.
Great. And one of our last questions from buyers is, do they need to be pre-approved before making an offer?
I'll take this one. So I love storytelling, if anyone knows me. I have some very highly qualified buyers that I was recently working with that, we had the discussion about getting pre-approved ahead of time, and there was a lot of reassurances that, they were totally set to go, no big deal. They were definitely qualified, which they were, but time came for us to write an offer on a property, and they did not have their pre-approval letter ready to go. And long story short, the property got 2 other offers on it, and ours, essentially said that we were going to supply that the next business day, and we missed out on the house. Since then, they've been trying to find a house that is equal to the one that they fell in love with, and because they, weren't ready to go, even though they were super well qualified on paper, when the seller was looking at all the different offers, theirs didn't compare because they couldn't show the financial strength to get it done, even though they were probably the best option. So for me, that was a big eye opener for them, and using that story with other buyers has been helpful. So no matter how strong you are, you can't be more ready when the right house comes along.
Yeah, I would second that. And just in terms of, Stephanie mentioned it earlier as well, is just to emphasize that buyers need to be just prepared across the board. And that's prepared with being, whether that's having, if they're buying with cash or, getting a loan, or just overall knowledge. And, the question of, I think I'll wait and buy next year or whatever. You just never know when that right property might come up, and being prepared and ready to roll it just relieves so much stress during, the purchase process.
Absolutely. And the only thing I'm going to add to that is, and I'll put it out to the team, does it matter if you have a national Quicken Loan, Lending Tree, whatever, versus a local lender? How are sellers agents looking at that right now?
Absolutely. I mean, if you have a property that has deed restrictions or special types of property, mixed use, anything that needs some special considerations, a local lender is going to understand those home products more than a national lender is.
And more importantly, when a national lender can't get the loan and they cancel a week before closing, they don't care. Their reputation's not at stake. And local lenders only say, hey, this property is qualified, I'm proceeding, if they can follow through, because their name's mud in our world if they don't follow through on a loan.
Yeah, I've also, found it really helpful when negotiating for my buyers, just pitching the relationship that I have with my lender and being able to get a pre-approval at 9 p.m. on a Saturday because sellers reviewing offers at 11 a.m. on Sunday. Unfortunately, if you're working with a lot of those big companies, you just don't get that type of customer service. And we all know inventory hits on the weekend. So that's a big one for me.
Well, that's all of our questions, you guys. If there's anything else you want to review, I'll let you take it from here, but thank you to all the viewers. If you guys have questions you want to submit after the webinar, please send those in to the marketing@benpropertysource.com.
Thank you, Jamie. And truly, this panel is the best in the business. Stephanie, Alice, Eric are some of the best agents in the entire market. Thank you for your time and feedback tonight. And Jamie, we're going to put you in the hot seat next time because what I want to do is talk about all the incredible marketing that we're going to do, that we do on our listings, and the 25 different things that you do on our listings, and to help understand why some homes sell and some homes languish. And I think that would be a really good subject of things that sellers need to pay attention to and ask their broker what they're doing to sell their home, because the day of putting in the MLS and putting a sign in the ground, that died about 10, 15 years ago. And I'd be really excited to share all the things that you do for our sellers. So you're in the hot seat next webinar.
Absolutely, bring it on.
Perfect.
That's awesome.
Well,
Thanks, everybody.
Appreciate it.
Yeah, thank you.
Please
Bye.
direct message us or send us a note if you have any further questions or feedback on what you'd like to see in future webinars. Once again, thank you, Lad Group here at Cascade Sotheby's.
All right, bye.
Bye.